Well, Tata Consultancy Services (TCS) has delivered a slightly soft Q1, and we are seeing that if we compare it to the ET Now poll, well, the revenue growth of 2.4% quarter on quarter in constant currency terms is slightly below what we were working with. We were expecting a 3.5% constant currency revenue growth. The EBIT margin decline of 130 bips sequentially is slightly higher than expectations. We at ET Now were working with 100 bips decline on the EBIT margin front, and profit of 9,008 crore is below expectations. The dollar revenue have come in at 6154 million, which is a growth of 2.8% sequentially, and as I said, the revenue growth in constant currency terms stands at 2.4% quarter on quarter. Management does state that they've crossed the 6 billion milestone in terms of the quarterly revenue this quarter, and one thing is certainly fairly positive is that they have an order booking of $8.1 billion, which is fairly broad based across markets and verticals. However, if we actually look at the stock price, well, the stock has gained close to around 14% on a YTD basis. Towards the end of the June, it had hit an all-time high, and we have seen some amount of softness in the recent days in terms of the stock price, and we will really have to see how the markets tomorrow react to TCS Q1 numbers. More about what management told ET Now and at the presser, Mr. Rajesh Gopinathan, who is the CEO and MD of TCS, stated that the business in North America, BFSI and retail all have shown an appreciable growth. We are watchful of the emerging situation but remain optimistic in terms of the opportunities. Mr. Gopinathan stated that the softness that we are seeing is in India is in one-off situation, and there is a total loss of rupees 350 crore in terms of revenues lost during this Q1 from the India business. However, the June month has seen some stabilization and recovery. Attrition rate of 8.6% is the best in class in terms of the industry. However, it is slightly ticking up in response to the demand situation. Having said that, management does state that overall they remain fairly positive in terms of the markets, and also they are seeing recovery in the Indian business towards the end of June. However, they remain fairly watchful and vigilant towards the emerging health situation, be it in some of the markets in UK as well as other markets including India. Management also states that almost 98% of their business comes from repeat business from their customers, and in terms of the pricing front, at the company level, their pricing is fairly stable and it is not volatile. It is completely from a long-term point of view, and it doesn't really change in terms of the demand situation that the industry is stating. And in response to ET Now's question, management also mentioned that yes, they remain fairly committed towards delivering a double-digit growth in FY22, and the FY22 double-digit growth will not be compromised given the one-off situation, and also that the $8.1 billion order book is well distributed across markets and verticals, and that Q1 margin was impacted on account of increments, but core markets were strong. There was some softness in the other markets, but structurally the management does believe that they should be able to sustain the aspirational margin band. So yes, watch out for TCS, how it reacts in trade after the results. So far, a slightly soft quarter coming in from TCS.